Good evening to you all.
Good evening, sir.
Good evening, sir.
Good evening, sir.
How are we doing with the assignments? Tomorrow, I already received one.
We will submit tomorrow, sir.
Very good, Niluk. Very good.
So even we can submit it tomorrow.
Tomorrow?
Yeah, we can submit.
Very good. Super. How about Tilini?
Sir, we will submit it tomorrow, sir.
Very good, Tilini. Very good. So others also will be submitted tomorrow. Trevor?
Yes, sir.
Good.
We will submit.
Super, super. I could follow Trevor. What do you say last, Trevor?
No, sir. We will be submitting tomorrow.
Oh, good, good, good. So I can expect some good work done by everybody as a team, right? Are you okay with our uploading your assignments to the Google Class so that others also can have a look at it? Is it a good thing or bad thing?
Sorry, sir, I didn't follow you.
Now, all your assignment work, final report, can we upload it to the Google Class so that everybody can read it?
Anything, sir.
No, so all in the interest of learning, learning curve.
Of course. Agree.
If there is any objection, please let me know. Anyway, I will have a look at it first and then discuss with you all later. All right. So, so today's presentation, can you all see the screen?
Yes, sir.
Good, good. Basically, with this presentation, we are completing the semester 3 and then semester 4. I hope to finish the semester 4 also within about 2 weeks, because we have 3 days a week and then 2 hours a day. No? And then we will thereafter after finishing the semester 4, we will plan for the MCQs and then short essay type questions, 2 exams, and then we are done for the entire course. So the plan is to complete the course by end of November. All right. So one of the topics that in the syllabus is that structure of the financial markets in Sri Lanka in comparison to the global financial markets. There are, after some empirical studies, there are 3 types of financial markets identified in the world. Small domestic type financial markets like what did we have in Colombo, Sri Lanka. Then regional financial markets, what we see something like in what is in Mumbai or Singapore to some extent, or Kuala Lumpur. Then the other major type is the global financial markets, something like London, New York, Tokyo, Hong Kong. And then I think Singapore also can be taken as a global financial market to some extent. But Sydney financial market can be taken as a regional financial market. So likewise, because of the volume size and then also the variety of products available, the financial markets, and then of course the legal structure and then the regulatory structures. We'll be learning more to a few slides going forward. So these are the major types of financial markets in the world. So we have the bottom end in Colombo, Sri Lanka. Although we have certain types of facilities like communications, market disseminations, and so on and so forth, but we are lacking a lot in the financial products and then other arrangements, probably legal framework wise we are okay with for the financial products that are available. But when it comes to the derivative markets, risk hedging instruments, the legal framework has to improve. So hopefully with the Colombo Port City development, and when it takes the full swings in a couple of years' time, we may have to open up a couple of more exchanges for derivatives, financial derivatives, and then commodities. With that, we have good chance of expanding ourselves into a regional financial market status. So the learning objectives on this today is to be able to distinguish between the global, regional, and offshore or domestic financial centers, the services offered by various financial centers, and essential requisites for a city to serve as an international financial center. This is very important, essential requisites. What are the requirements for a city financial center to serve as an international financial center? So this particular point, please listen to carefully, because that can be one of the exam questions, the requisites, essential requisites. Services offered by the financial markets. In summary, liquidity provision. The liquidity is not on the volume wise, but any product being able to be bought or sold is also called liquidity of the instrument. So liquidity provision is one of the functions or services in a financial market. Then the price discovery. The discovery of equilibrium price, going by the demand and supply for such financial products. Not only financial products, it should be for commodities as well. Good example we can think of in the very recent past is that for a century or 1.5 centuries, Sri Lanka tea auctions took place on an open outcry system at the now the Ceylon Chamber of Commerce building. However, due to the COVID pandemic, the buyers could not gather, and then the Ceylon Chamber of Commerce and then few other authorities took the initiative, and then they started building up an electronic exchange for tea auctions. It was a record, or it was a really an impressive work. Within a period of 6 working days, they were able to build up an electronic auction system for the auctioning of tea in Sri Lanka. So thereby, not only Sri Lanka were able to overcome the threats of COVID pandemic for the tea trade, the tea produce could be sold effectively, even though the tea buyers and other relevant officials who were involved in the open outcry system used to auction the tea, they were at their offices, or they were at their residences or in their respective countries, and this tea auction could take place. So it has to be admired, the effort has to be admired. At the same time, it is sad to recognize that all these century or 1.5 centuries, or at least few decades, we could have done the electronic auction system. We did not do it, or we didn't have the initiative to do it. But the COVID pandemic did it. At the same time, it is worthy to reckon with that the Sri Lankan IT professionals, the efficacy at which, efficiency that they perform their jobs, the young adults who are in the IT field contributed a lot, and the auction system was successfully constructed and put it to practice within 6 working days. So I think I shared with you before, Sri Lanka is one of the emerging markets for IT software sales to the world. If I'm not mistaken, the current revenue that brings into Sri Lanka from the IT software system sales to the rest of the world is the 5th or 4th largest revenue earner for Sri Lankan economy. So having such strong points, we never thought of implementing an electronic auction system for Ceylon tea, whereas Ceylon tea was one of the better known world brands. So the price discovery function for Ceylon tea through electronic auction system helped the tea plantation workers, tea factories, and then tea estates to manage efficiently throughout the pandemic period, 1.5 years or 2 years. All the other areas were shut down, but the tea industry performed well. So the tea estate workers also got their daily wages. If not for the auction to sell the Ceylon tea through the electronic auction system, the daily wages paid to the tea estate workers probably would have been more difficult. However, these strong points, and then to use them in the proper manner to organize things better, and then to see that the price discovery for Ceylon tea through an electronic auction system is a remarkable achievement. Then the market efficiency. So financial markets create market efficiency. There are few requisites for achieve the efficiency. Sri Lanka and Colombo financial market had been one of the more efficient markets in the region because of our payment and settlement systems that were created by the Central Bank of Sri Lanka, including RTGS, scriptless security settlement system, SEFT, slips, and various other kind of payment systems, as supported by the SWIFT message carrier base. So market efficiency in Sri Lanka is supposed to be one of the best in the region or in the world, because we have never missed a payment due to inefficiency of the systems. We have never missed a payment on the value date. So that shows that the market efficiency, the requirements are more or less in place, but the other transaction volumes and then the variety of products available is the shortage here. Exchange efficiency. Exchange efficiency, again, the same thing can be spoken. The exchanging of value and the instrument, the securities, is again conducted in an efficient manner. However, the volumes and the variety of products is the shortage. Then the economic growth. Economic growth can be accelerated if this market performance is organized well and then driven to the need of the hour or the goals to be achieved, like in the case of the electronic auction system for tea. We could have started exchanges for currency options, exchanges for financial futures contracts. Hopefully they will come up when the Colombo Port City is on the offing, probably in a couple of years' time. So these are the services usually offered by a good financial market. Such services are required to achieve the necessary economic growth and cater to the economic necessities of the entire population, and also the population in and around Sri Lanka and the other countries who wish to use Sri Lanka for their economic activities. So the financial markets are the centers facilitating buying and selling of financial instruments, claims or services. Financial markets caters the credit needs of the individuals, firms, and institutions. Financial markets deals with the financial assets of different types, such as currency deposits, checks, bills, bonds, etc. We have to add many more here, covering the risk management instruments, derivatives, currency options, financial futures contracts, swaps, and the swaptions. There can be options on swaps. So therefore, this list can only enhance. So the services offered by a good, comprehensive, functioning financial market is enormous. International financial centers, the global financial center type, which is the biggest category, London, New York, and Tokyo, provide a comprehensive range of financial services to an international clientele. A principal center for its time zone. A principal center for its time zone. So as it is, taking the current experience Sri Lanka is experiencing, Sri Lanka or Colombo to reach the global financial center status is far, far away. However, the major deficiencies, as we can understand, on a very big scale, the stumbling blocks, is that the prevailing rules and then directions hampering the financial transfer of financial assets and the payments. What are the root causes of all these problems in Sri Lanka? Basically, the big import bill and the comparatively tiny export earnings contributing to depleting financial reserves. So the root cause then can be drilled down to or identified as not so widely thinking entrepreneurship in Sri Lanka. The lean structure of the entrepreneurial abilities and the structure of Sri Lanka to produce goods and services despite available resources. Example, the top IT professional skilled labor force. So using such resources, Sri Lanka should be able to earn more foreign currency, foreign exchange, if only a direct effort to increase the foreign exchange earnings through various spheres. I think we discussed one of the areas that we can really improve is education, export of education. The export of education that we see is a negative factor for Sri Lanka. Currently, when there are about 250,000 young adults qualifying for university entrance, only about 40,000 are taken to the state universities. Balance 200,000 plus young adults annually either look for foreign university education, higher studies, paying for valuable foreign exchange out, which is an import. We could turn it around if only the 17 state universities and then other private higher education institutions like the Institute of Chartered Accountants and Institute of Bankers, for that matter, if they can gear up and then escalate their degree awarding certificate status, the young adults will not go out of Sri Lanka to spending the valuable foreign exchange to study and then either come back or settle down in those countries. And if that needed education, it can be provided in Sri Lanka, that amount of money remitted out of Sri Lanka could be saved, could be stopped. At the same time, Sri Lankan universities and then the higher education institutions privately managed could attract young adults seeking higher education from the neighboring countries and the rest of the world, so that it can be made to earning foreign exchange from currently what we see is negative or paying out foreign exchange. So these are just one example that I am indicating. So with such endeavors, going through each and every sphere of activity, we must plan to reduce the foreign exchange expenses, but and at the same time to attract or earn more foreign exchange to the country. If that is the case, then our marching forward to regional financial center and thereafter global financial center status from the current small domestic financial status could be achievable. Regional international financial centers, example, in the Southeast Asian region is Sydney, Hong Kong, and Singapore. Conduct of international financial business, though smaller scale than global financial centers, with a more regional focus. So this is to say that Colombo Financial Markets Financial Center has to make things possible and line up the endeavors and the strategies to become a regional financial center first, and thereafter look at improving to the global financial center status. There's another category of offshore financial centers. They were created usually as tax havens with minimal or zero tax requirements. Now there is a accusation also. I was listening to recently the Prime Minister of Pakistan, Imran Khan, accusing the Western economic powers for maintaining offshore financial centers with tax haven status, saying that especially the politicians who rob the money from the public coffers in their respective countries, and other businessmen use these tax havens to invest their money, and those tax havens and the big big countries, economic powerhouses, they have structured their legal systems in such a manner that even if those emerging poor countries want to investigate the funds siphoned from their countries to these tax havens and then the big cities, they are prevented from identifying those assets, even if identified, getting cleared through the legal system in the respective countries is a gigantic task. So instead of the world's major economic powerhouses supporting the poor nations, poor economies to organize their economies in a more constructive manner and then to develop these nations, giving aid and so on and so forth, they have some other ideas of planning to safeguard the ill-gotten money from these countries by the leaders or the political leaders or the economic leaders invested in these tax havens and big financial cities, preventing them to be brought back to the countries which own those funds. So yes, it is a big question why such tax havens as Bahamas, Cayman Islands, and Isle of Man, why they were created, and then the purpose, because big chunks of money invested in these tax havens only seclude or isolate the poor nations' people's money into those centers. So the intermediation between the offshore borrowers and then lenders are effectively taking place in these tax havens. So such tax havens, in some cases, not only charge a minimum or zero tax, they are structured to cover up the ownership of such funds or beneficial ownership of such funds, and the identifying the legal source of such funds, preventing the poor nations to acquire those such money that was robbed from those countries. So minimum regulatory requirements, meaning it's a very much understatement, but it is, they are very well structured to prevent any investigator to identify the beneficial ownerships, low or zero tax. Another future of these offshore financial centers. So, domestic financial centers, providing financial services with national focus to the domestic economy. Sydney and Mumbai are regional as well as domestic financial centers. Colombo is a domestic financial center. So, domestic financial centers are the smallest financial centers under this categorization. So, the requisites for successful financial center. This can be discussed under not only these 6 categories, there are many other forms, but these are the main ones. Initially, there should be a stable political environment, political leadership, stability, and there shouldn't be any reversal of such political decisions as quickly as they are made. Then the economic activities that is growing, and then the legal framework that is supportive of the business activity to sort out any problems that arise between the businesses. Then the regulatory framework which support smooth functioning of the financial center, the payment and settlement systems, and safekeeping and then trust work of the assets. Then the communication, effective communication facilities. Sri Lanka is also one of the city centers who has an effective communication system compared to the regional other centers. The competition between 4 or 5 telecommunication companies providing communication services is helping the city center to Colombo City to develop into a major market. However, since of late or recently, we have seen the pricing factors going little out of control. Before earlier, we saw that because of the competition, the pricing was reducing to some extent. But recently, because of the heavy demand due to particularly the COVID pandemic, and then the increased demand for distant learning or virtual education system facilitation, there was a big demand for the communication infrastructure. The charges for the communication facilities in the very recent past had escalated manifold, despite the government reducing some taxes on them. The communication companies had tried to increase their levies to higher levels. There are other factors. Other factors also can be discussed at length in the next 2-3 slides. But one other factor that comes to my mind is that the ancillary services for the financial services sector, like auditing, then lawyers or legal work, drafting legal agreements, such factors also, and then also transport. improve transport. I don't think Sri Lanka can boast of a good transport system within Colombo or within the country, because the public transport has been going from bad to worse. So therefore, all those deficiencies has to be worked out to improve the status quo. So there are about 10 financial requisites I have listed here, and there are some more on the next slide. First one is the peace and political stability. You would have remembered when the civil war that ended in 2009, prior to that, when the bombs were going off at the buses, trains, and then various important places, the peace was disturbed, and then the political stability was in a disarray. The political culture between the political parties also has to be revamped, because what you see is that when a party goes into the opposition, they promise each and everything that they'll put right when they come to power, but when they achieve power, they are unable to, they don't have the desire to fulfill the requirements. And at the same time, the opposition political parties would turn, even if there is a positive step taken by the government, would try to turn, the political opponents would try to turn them to their political advantage, shamelessly forgetting their national duty. So such things has to be legally banned, and then such perpetrators need to be dealt with on a court of law and then punished, so that harmony to be maintained in a positive manner to achieve the goals or targets that our country should go for, achieve. Rule of law, a sound legal system. This again a question mark. The legal system that is prevailing is far too long to resolve disputes or resolve complaints or lawsuits. They need to be reorganization, particularly what we have observed in practically and personal experiences are that when you want to make a complaint about certain injustice or any loss of value, starting from the police stations where law enforcement begins, all manual records are maintained, and their horrible writing make it very difficult to identify the words. And whereas Sri Lanka having one of the best IT professionals in this country, there seems to be a failure to convert the legal system of operation, a practically operating legal system, into an IT system so that the legal process could be made very efficient, or the legal decisions or resolving lawsuits to be done quickly, so that the business investors know that even if there is any loss of value or any injustice they face, could be resolved using the legal system in an efficient manner. So the good communications is another aspect which need to be used to boost the economic activity. The few companies like Sri Lanka Telecom and Dialog, although they do have built their infrastructures, there should be proper streamlined usage of their facilities, targeting the economic value addition. The infrastructure seems to be comprehensive, but at the same time, sometimes unhealthy competition between the telecom companies, and then also provision of communication facilities and services to the general public and the business community need to be conducted in a positive and progressive manner. Then the skilled labor force. When you are speaking of skilled labor force, you would imagine, or you would have observed in the recent past, or last few weeks, few months, that the countries, the Western countries and the developed world are targeting the skilled labor in countries like Sri Lanka to be attracted to their societies or countries in an increasingly alarming rate. So, big question mark, why the Sri Lankan authorities do not think of retaining such skilled labor and to use such skilled labor to develop our country. The lack of opportunities, the meager salary structure prevalent in the country, all contribute to the skilled labor being drained out of the country to those developed countries. Then the financial markets, efficiency and the professionals involved may be to some extent skilled, but we need more young adults to engage in the financial markets. That can be done only with the expansion of the financial markets. So financial markets has to rethink, like in the case of electronic tea auctions, if we can start few derivative instruments and then start up an exchange and then expand the existing financial market structure, the product range, step by step, this could be, we could walk towards the creation of in-depth financial center. Then financial instruments, the list of financial instruments available is very, very small in Sri Lanka. They need to add many more financial instruments to the list, innovate, and also copy available instruments from other centers and support the business entities to use them proactively to cover their risks and achieve more returns. Then the prudential supervision. The three regulators, financial services regulators, Central Bank of Sri Lanka, the Securities and Exchange Commission, then the Insurance Regulatory Commission, insurance regulator, they have comprehensive rules and regulations on record or on the books, but still the prudential supervision has to be meaningful. The supervision need to be on-site and off-site supervision, need to be more organized, and then result-oriented. It is very recently that the central bank FIU started imposing financial penalties on the wrongdoings of certain finance companies and the banks, and publishing such wrongdoing and the naming of such institution. Up to last year, such action was not seen. The regulator was fearing that there could be legal backlash. But how come during this year and the late last year, when they published about 6 or 7 incidents of non-compliance by the finance companies and the banks, and the penalties imposed were published, and then that those lessons were good enough for others to organize their operations properly, learning from the penalties imposed on the 6 or 7 entities. Then the complementary services like legal, accounting, auditing, and courier services and various other functions. So complementary services include headhunting as well. So they need to be, I think the legal profession in Sri Lanka is in plenty, and then accounting profession also seems to be all right or in the numbers, but seems to up their professionalism. Then the market economy, the demand and supply based market economy has to be further improved. Urban infrastructure, especially transport. Urban infrastructure to cater to a cosmopolitan population for their needs, lodging, domestic hotel, hospitality sector, and the transport. Transport is the biggest weakness that we see in this discussion here, whereas the taxi services and the private and public bus services and the rail transport system is in dire states. So they need to be organized and a better service with comforts and then efficiency to travel from one point to the other point at a given estimated time slots. So another 10 requisites. There should be a policy of no discrimination, whether they are the individuals are foreigners or domestic or any nationality or any religious belief. There shouldn't be any discrimination. So the discrimination point, I think in Colombo per se, discriminations may be at a lower ebb. However, when it comes to hiring of young adults, I think there is a discrimination observed where certain elite school background for the young adults give them an advantage over the rural schools educated young adults. That itself is a explicit example of how the education system is organized in the Colombo leading elite business schools, elite schools, and then the regional school network. So that the education system there has to be more organized for those rural youth to achieve their higher education, all the required training, language skills, and the behavior to suit them eligible to various job markets in the economy. So that those type of discriminations has to be eliminated. Then the taxation, there should be low taxation. I think as soon as this government came to power, the tax rates were reduced drastically. The value-added tax was brought down from 15% to 8%, and then various personal income thresholds were brought down. So such things are good, but the government did, in my opinion, with a good intention of creating more entrepreneurs and then more business volumes. But however, very sad, the COVID pandemic destroyed all the expectations. However, maintaining low taxation is a requisite for a successful business center. Then the regulatory light-handedness. The regulatory system need to be well knit and foolproof. At the same time, the regulators and the enforcement machinery should be with a soft mind to make the regulations work. They cannot be hard-minded and creating displeasure among the business community. So regulated light-handedness is also another requisite. When it comes to regulatory enforcements, the peculiar behavior of bureaucrats at times who are vested with the responsibility of enforcing the regulatory framework seems to be little, not little, in a big way skewed towards bribe taking and then various other corruptions. So that it also has dragged down the focus on the mindset of the business leaders to a great extent. The currency used for international transactions. Unfortunately, Sri Lankan rupee has not been an international transaction friendly at all. The legal framework has to change, let alone with European or any other developed countries, but with the next door giant India, where major bilateral volumes take place, there should be a facility to import and export, mainly export our produce to India and invoice them either in Sri Lankan rupee or in Indian rupee, whereas most of the trade happens invoiced in US dollars. So this has to be given rightful thought and seen to some resolution agreed upon with the Indian authorities so that the currency could be used without exchange risks. One of the bilateral currencies, either Indian currency or Sri Lankan currency, could be used to settle those transactions. There is Asian Currency Union arrangement, but again, the settlement takes place in US dollar. However, the Indian rupee and the Sri Lankan rupee legally is not legal tender outside the respective countries. So this can be really negotiated and then achieved a great progress in making the respective currencies international transaction friendly. Head offices of large multinational corporations, maybe due to the political instability and then low economic activities and then such insignificance, the multinational companies, multinational corporations have failed to establish their presence in Sri Lanka. Asian Development Bank, IMF, World Bank, and various other multinational corporations. They may have small representatives or councillors present, but however, there should be a large-scale presence, such as their head offices being planned in this country. Convenient time zone overlaps for trading. That way, Sri Lanka geographically located in a convenient time zone. However, Sri Lanka had not been yet able to reap the benefit of the convenient time zone for overlap for trading. Political and administrative capital city. Sri Lanka has a political capital city of Sri Jawadanapura and an administrative commercial capital city of Colombo. But because of some bureaucratic authorities not taking appropriate decisions and then probably ineffective decision making has pulled us backwards, especially in the arena of keeping the city clean and maintenance of peace, and also sometimes collecting garbage and creating more friendly atmosphere has to improve with the powers vested in with the political and administrative capital and the commercial capital empowerment framework. Then the cosmopolitan culture, because of the meager economic activity that is taking place, and then also not so friendly transport system, the communities in and around the world had not thought of sharing the Sri Lankan taste and culture. So if the Sri Lankan atmosphere improves only, the communities in and around the world will at least think of traveling to Sri Lanka, spending few days or weeks, improving the tourism in one hand and contributing the economic activities, the business transactions in Sri Lanka or being in Sri Lanka should propel the economy to move forward. Location and sound operation of a central bank. Central bank, thankfully, is located in the commercial hub of the Colombo city, and then also its operation has been successful so far. However, the political alienation sometimes have directed them to take decisions towards not so economic friendly thought process. Central bank being the banker to the government and the financial advice to the government, they should bear a certain degree of independence from the political affiliation. However, central bank is also responsible as much as the political authority of the government to the economic success of the country. So there can be decisions and directions in a similar manner in the same direction. But when it comes to political decisions in favor of vote winning decisions, Central Bank of Sri Lanka has to have its own command to make decisions to the achievement of progress in economic spheres. Then widespread command of English language. The English language has been spoken very much by many Sri Lankans. So therefore, this is a plus factor. But when it comes to certain levels of the society, the ability to communicate in English language or the international language and in a written and verbal mode should improve further. There, however, on the educated young adult population, the command of English language had been satisfactory, and therefore they have found employment on a ready mode or readily available employment opportunities within the country and outside the country. Financial system consists of institutions, regulations, instruments, and the markets. Institutions, local, regional, international, and multinational organizations should be part and parcel of the institutional network of financial system. The institutions comprise of the Central Bank of Sri Lanka and the licensed commercial bank and licensed specialized banks and the registered finance companies. The numbers in those categories per se may be more than required, but the variety of the institutions has to improve. Example, we do not have any single development financial organization. In the past, we have had DFCC and then NDB as development financial organizations catering to entrepreneurs with a need to long-term financing or the capital provision for the entrepreneurs and the farmers and the fishermen. But however, at a point in time, there had been political decisions to convert them to commercial banks. Therefore, the only two organizations which were catering to development finance were converted to commercial banking. And we have not seen any merchant bank operation in Sri Lanka, which contributes to more financial instruments and risk-absorbing financial instruments, derivatives practice in Sri Lanka. We have not seen any securitized papers of any nature to test the markets in Sri Lanka. When it comes to regulations, the regulations available for the existing institutions may be adequate, but the regulations should permit creation of more financial instruments to manage not only the profitability, also to manage the risk and other operational facilities, so that the number of financial instruments available in the market, in the marketplace, for any entrepreneur, for any business leader to launch their business activity in Sri Lanka. Then the markets, mostly we see over-the-counter market other than the Colombo Stock Exchange. So there need to be more organized markets coming up. The good example that we already mentioned is the tea auction, electronic tea auction. That's an exchange for the Ceylon tea. So similarly, you might be in a position to create another exchange for Sri Lankan garment producers. There can be certain quantities of garments traded in an exchange. So thereby the price discovery of certain garments and their marketability is stabilized. Talking of the institutions, Central Bank of Sri Lanka just a few years back only thought of identifying the systemically important banks. I think just a handful of licensed commercial banks such as the Bank of Ceylon, People's Bank, Commercial Bank, HNB, and yes, those four have been identified as systemically important banks, which means to say that if any one of those systemically important banks is to fail for any reason, then the economy would damage to a great extent. So therefore, they listed certain increased surveillance and then requirements to be maintained, such as capital requirement, liquidity requirement, and so on and so forth, for those systemically important banks. Anybody want to make a comment or
No, sir.
ask question? Okay. Then financial institutions, financial system consisting of institutions and regulations that act on the international level, as opposed to those that act on a national or regional level. The financial system consists of institutions and regulations that act on the international level, as opposed to those act on the national or regional level. This is the main players are the global institutions such as International Monetary Fund and the Bank for International Settlement. Now, the World Bank or Bank for International Reconstruction and Development, IBRD, is little out of the way here because IMF deals with the fiscal problems of member countries, and the Bank for International Settlement looks after the regulatory compliance of the respective banks in those countries through the central bank. Example, central banks and finance ministry, the national agencies and government departments, example, central bank and the finance ministry, and private institutions acting on the global scale, banks and hedge funds. So these are the financial institutions identified in category wise in an economy. Regulations broadly to protect the savers in deposit taking institutions and to protect the investors in the investment enabling companies like the Colombo Stock Exchange through the stockbrokers and probably the unit trust where the investors buy the units. These are the only few that we can talk of in Colombo market, but elsewhere in the developed financial centers, you find hedge funds and merchant banks and various other investor-friendly products and instruments. So the regulations start from licensing, issuing license. So under the Montreal Act of 1949, central bank is authorized to issue licenses to licensed commercial bank, licensed specialized bank, and the registered finance companies. And then also in the from the late 90s to primary dealers, and no objection letters were issued to the money brokers. And from about a decade ago, they were also brought under the umbrella of Domestic Operation Department or DOD, licensing the money brokers. Then under the guidance and the recommendations of the Bank for International Settlements, Basel I regulations and Basel II regulations and Basel III regulations were implemented in Sri Lanka really lately, but in the rest of the world, they were implemented earlier. Basel I particularly was implemented in 1980s, where each and every financial institution should keep 10% of capital out of the risk-weighted assets. I think I explained the risk-weighted asset concept in a previous discussion. On a balance sheet of a financial organization, you have the assets, the loans and facilities granted, and other investments, maybe land and buildings as well. Now, there is a range of risk weights allotted to each type of asset. Now, when banks and finance companies give temporary overdrafts without any collateral, the risk weight is about 200%. If you give 1 million overdraft, the risk weighting of that is 2 million. And if a housing loan is granted with the collateral of mortgage or house, then the risk weight is 50%. If 1 million rupee housing loan is granted, the risk weighting is 500,000. So likewise, when you risk weight the total asset portfolio of total assets of the balance sheet, and the risk weighting is totaled up, and out of the total risk weightage, 10% should be, there should be capital maintained at this particular bank or the finance company. So that is the world standard recommendation of the Bank for International Settlement. But the Sri Lankan Central Bank, whilst implementing Basel I in Sri Lanka in late 80s, indicated that the Sri Lankan banks should maintain 12% capital on the risk weight of the assets. So what is the importance of this risk weighting and the 10%, the global standard, and 12% in Sri Lankan standard? The importance is that when it comes to international transactions, the counterparties in other countries will know when they analyze their counterparty in Sri Lanka, the bank or a finance company, going through the audited accounts and statements, financial statements, that the Basel I capital requirement percentage maintained is 10% or 11%, or no, Sri Lankan standard begin at 12%. So 12% or 12.5% or 13% or 14%, it gives them a sigh of relief that this particular entity has the capital, the shareholders' money maintained at the level of 12% or more of the risk-weighted assets. So they wouldn't mind going through a transaction with this entity in Sri Lanka because of the comfort factor that the entity is capitalized to the extent of 12% or more on the risk-weighted assets. So that enables the regulator, central bank, also to make the entity function on a risk-free, more as a risk-free environment, whereas the 12% capital requirement, if it is to maintain, and then if they are to enter into another asset, a loan given to a project or any other asset, if they want to create in their balance sheet, they must ensure that there is 12% capital. So they may have to bring in more capital if the risk-weighted capital based capital requirement is below 12%, they will have to bring in more capital. Otherwise, central bank will penalize them. So therefore, any new projects undertaken as well is also supposed to be adding on to the equivalent amount to the capital maintained. Then the second regulation, Basel II regulation, when it came in the 1990s, basically that requirement stipulates to measure the risk weightages of not only the credit portfolio of the balance, not only the asset portfolio, to measure and maintain the capital 12%, basically monitoring the credit worthiness. The Basel II required measuring the market risk and operation risk as well, in addition to the Basel I requirement. Market requirements, the various tradable market instruments portfolios maintain has to be mark to market compared to the current market price against the purchase price. And if there is a loss, that has to be supported by the 12% capital. And if there is a gain, mark-to-market gain, then it's a profit. Then operational risk measures, also little comprehensive calculation. However, it can be explained in 2-3 sentences like this. Over a period of 3 years minimum, any operational problems that have occurred, example, operational non-functioning due to electricity failure, or operational hazards of internal or external frauds, or any other disruptions, has to be recorded with the time duration and with the actual losses suffered, business losses suffered due to the episode. And during these 3 years, they have to make an average for 1 year, and for the ensuing year, that average 1 year operational loss has to be supported by 12% capital requirement. So not only the Basel I requirement, then market risk and the operational risk requirements also has to be supported by 12% capital requirement under Basel II. Then the Basel III regulation came in from the BIS, or Bank for International Settlement, after the subprime mortgage case issues with the world experience in 2006, 7, 8, and Basel III regulation in Sri Lanka was implemented from 2014. In addition to Basel II requirements of capital maintenance at 12%, under Basel III, these banks and finance companies should maintain liquidity ratios known as liquidity cover ratio, net stable fund ratio. LCR, or liquidity cover ratio, is a more short-term liquidity measure, but net stable fund ratio is a long-term measure of liquidity. And from 2014, they allowed on a percentage basis to maintain 100% liquidity cover by the year 2019. So these three regulations are supposed to be very effective in building up the strength of the financial services organizations. They are recommendations of Bank for International Settlements. Then the IFRS, or International Financial Reporting Standards, in Sri Lankan terms is SLFRS, Sri Lanka Financial Reporting Standards. The International Financial Regulatory Reporting Standards came from the world body, but Institute of Chartered Accountants in Sri Lanka adapted to the Sri Lankan standards and named it as SLFRS. There's another accounting standards called IAS 39, and particularly IFRS 9 stipulates that any investment in financial investment that this entity carry out has to be categorized into three business models. One is held to maturity, expecting the cash flow returns. The next second business model is available for sale, again expecting the cash flows, and then when necessity arises to be sold. Third category or third business model was held for trading. Those financial investments bought for short-term gains and losses, short-term gains, which is losses are also possible. So out of these three business models, the held for trading model, only the mark-to-market evaluation, measuring or mark-to-market evaluations are going through the P&L. Other two, held to maturity and available for sale, mark-to-market provisions has to be made through the balance sheet. So these are the regulations to keep the organizations stronger. Then these three regulations, namely Convention of Suppression of Financing or Terrorist Financing Act number 25 of 2005, Prevention of Money Laundering Act number 5 of 2006, Financial Transaction Reporting Act number 6 of 2006. These three Parliament Acts were brought in as special Parliament Acts to prevent terrorist financing and then money laundering based on the recommendations of FATF, Financial Action Task Force, based in London. So they help to identify the source of funds of any investor, of any customer, and the normal or usual KYC or know your customer data of individual customers, and the purpose for investment, and the genuine reasons of the economic transactions. So these three Parliament Acts have impact from A to Z, meaning across the board for the financial institutions. under the Financial Action Task Force, or FATF, their function is to set the anti-money laundering and combating of financial terrorism framework. So under the recommendations or regulations, each country should have a financial intelligence unit set up, which has enormous powers to issue regulations to identify and report the predicate offenses of money laundering committed by the customers and the counterparties, and the financing of terrorism committed by the counterparties and the customers. Then the Basel Committee on Banking Supervision, BCBS, provides detailed recommendation on customer due diligence, sets core principles. Now, the know your customer requirements are the basic requirements to identify the bona fides of the prospective clients or counterparties. Customer due diligence is more in-depth search requirements of the customer and the counterparty with regard to the involvement of the particular transaction with that particular customer or counterparty. Then the United Nations issue lists of suspect blacklisted whose assets must be frozen, sanction list which now the blacklisted names are usually published by the UN and major countries like US and UK and other authorities. Now the blacklisting is done when a party, an individual or a corporate or a financial entity, or even for that matter a country, conducts illegal activities. So therefore the blacklisted individuals or entities has to be prohibited from entering into contracts with the banks and finance companies. So therefore, those blacklisted entities and the individuals are penalized to that extent so that others or onlookers know that there's a punishment for illegal activity conducted. Then the sanction lists which announced are by the Office of Foreign Asset Control, or OFAC. Office of Foreign Asset Control is the US equivalent of FIU, then the United Nations, European Union, and other lists. These entities publish the identified wrongdoers and then build up a sanction list. Basically, those sanctioned countries and then business entities are given little concessions for on humanitarian grounds for food and medicine. Otherwise, any other transaction has to be stopped or not supported. So this regulatory environment in the world prevails in order to regulate those who do harm and illegal activities to the general public. US Patriot Act in the year 2001 came into being soon after the 9/11 World Trade Center and the Pentagon attack to identify and protect the US financial system. Now, from the day that it came into force, it has an impact on any financial institution around the globe who are dealing with, who are transacting US dollar currency. As you all know, US dollar currency has to be exchanged through a US bank. Now, if the US dollar currency exchange paying and receiving is happening in any other country in the world, like the FCB accounts in Sri Lanka, or if anyone maintains an account, US dollar account in London or any other country, then probably this wouldn't matter. But the essence of this provision is that when the US FIU, which is OFAC, or any US court or US federal police or any other law enforcement agency needs details of transaction that is being carried out through a nostro account maintained in the US bank, if these law enforcement agencies need to ask for more details of the transaction, there should be an agent, a law firm appointed by a bank or a finance company in any other part of the world. That law firm agent should be in New York, and their duty is to obtain and supply such information required by the US law enforcement so that they can carry on with their investigations. So to do that, all the banking and other financial entities around the world had to enter into a contract with a US agent in New York, a legal firm, and sign a US Patriotic Act certification so that they are able to obtain more details of any transaction suspected by the US law enforcement, and then pass on such information to the US law enforcement agencies to facilitate their investigations. So this has brought in considerable cost to the banks and finance companies around the world to maintain agency relationship with a US legal firm. Then US Foreign Corrupt Practices Act 1977 also enables US law enforcement agencies to obtain information of US and other citizens corrupt practices committed within the US financial system. Then US Foreign Account Tax Compliance Act. Any US citizen or a resident or any person who have been to US and earned an income and who is liable to pay US tax, if they have maintained an account relationship with any bank or finance company around the world, they must identify such US citizens or residents, even a green card holder, who are liable for US tax, and inform the US tax authorities that such and such a person is maintaining an account with us. And then finally, to ascertain whether that individual or the corporate entity has paid the US tax, and that the US tax authority is satisfied with the tax settlement, there's a liability on the banks and finance companies around the world to submit information through a web connection to the US tax authorities. And these tax authorities, if they feel that any of the banks or finance company who maintains an account or who channel transactions to US banks has not fulfilled this task, they can withhold up to about 30% of the transaction that is being channeled through the US financial system, and that 30% of the value of the transaction to be kept with them until the tax amount is settled in full. So these are the world regulations which we have to know when we transact in the world financial markets. I know it's boring, but boring to me as well, but we have to fulfill the syllabus requirements. So therefore, we have to go through these detailed and then discuss and then make ourselves knowledgeable. So therefore, since we are on the time target now, we shall resume tomorrow at 4 p.m. on this slide. And we shall cover some more other set of slides tomorrow after this. So are you all okay? Are you all awake?
Yes, sir.
Very
Yes,
good.
sir.
Very good. Very good. Very good. Anyway, if it was a physical class face to face, that we could have enjoyed more. in these discussions, but however, we have to, because of the pandemic, we have to be in our respective places and then discussing these things. So let's meet tomorrow. And then I hope by tomorrow when we meet, I would have received your assignments, final reports. So let's have a chit chat on that and then the balance slides covered. Any question, any comment? As usual, no comment.
No, sir.
Yes, Trevor?
No, sir. Not coming.
Okay, very good, very good. So let's meet tomorrow at 4 p.m. Good night.
Yes, sir.